Hey gang, here we are. It's been over a year since I've done one of these. The transition went from should I buy to should I sell in October 2021. And boy, that was just too little too late, as they say. I did kind of a bunch of layer out videos, and the only one that actually hit one of my layers was Matic back in the day. I remember it was like $2.70 or something. Anyway, due to popular demand, there's been a lot of talk about RUNE. RUNE is a game changer, Thorchain, whatever you want to call it. I refer to it as RUNE as we go forward. And a lot of people I know have it, they like it, and I'm going to analyze it in a fair and objective manner, especially in light of how things have changed in this market right now. That means we need to question every single thing. And we also know 98% of crypto is going to nothing. The question is, what should you own? And everybody now should be kind of scurrying to the very safe haven assets as we go forward, because everything else gets smashed. But let's just jump in here and see what we find out. And again, the community voted for this. We had 1,400 votes in the space of an hour or so. 55% said, yes, analyze this. 45% said, we don't care. But again, I do everything by consensus, and that is the consensus. And of course, this is edutainment, not financial advice. The rigorous process we follow, for those who may not be aware of how we do it, is the framework we put together back in early 2021. This is kind of like along the lines of how I would evaluate an equity. Same thing. I apply the same rigorous process to crypto. And again, 98% will go to zero. So we need to look under every single rock, every single hood. And today I will be focused very much on data. It's all data. And when there's a gap in data, it gives me concern. Okay. And we should always question everything, especially after 2022. So the 10-part series I forgot to mention, we'll look at kind of what it does, ranking, is there any industry disruption, value props, technology and developers and developer activity, tokenomics, the ecosystem, growth and longevity, risks, and price prediction. For this one, I will not be doing any price prediction, and I'll explain why later. So first of all, what it does. This is part of the Layer 1 Cosmos ecosystem. It is a decentralized cross-chain liquidity protocol based on Tendermint and Cosmos SDK, and it utilizes a special thing called TSS, which is Threshold Signature Schemes. Now, it does not peg or wrap assets, which is a good thing. It simply determines how to move them in response to user actions. Now, it does observe user deposits to vaults, executes business logic in a decentralized manner, and processes outbound transactions. It's a primarily leaderless vault manager, ensuring every stage of the process is Byzantine fault tolerant. Now, the key objective with this is to be resistant to centralization and help build cross-chain liquidity. That's it in a nutshell. Now, what are governance tokens? There's been a lot of talk about governance tokens lately, and basically the governance tokens are ownership in a decentralized protocol, whether it's a DAO or a DEX or whatever else. And RUNE is used in governance. It's also used for staking. It's used for bonding, for validator nodes, and trading. Now remember, the more the adoption of the RUNE token, the more the adoption of the platform, the more the demand for RUNE, etc. But what is interesting, you can swap assets directly within RUNE without any need for the RUNE token to pay for fees, which is a cool feature for users, but not necessarily for RUNE adoption. But we'll talk more about that later. Now, let's go to the team, and I always look at the team, etc. And this is the first one I've done where the team is actually anonymous, and the official creators are only known by their publicly by their aliases. And this for me is a little bit scary because I like to know who is behind the machine, and that's kind of, always took me aback. Now, actually, in full disclosure, back to my history of RUNE, I did have a limit order after, I think it was the second hack, at $3.01, and I missed that limit order by 1 penny. The lowest price went to $3.02. So I never actually owned any RUNE, and I don't own any now. So, but that is interesting. I nearly became an owner way back when, but missed it by a penny. Maybe that was a slight blessing in disguise. So let's look at the kind of decentralized exchange by market cap competition. This is from CoinMarketCap. And Thorchain is ranked number 73. You can see it's up against, according to their categorization, Uniswap, Stellar, PancakeSwap, Synthetics, etc., Curve, 1inch, Loopring, and a lot of other good names. So it is in a competitive field, but if you go beyond multi-chain dexes, there's a lot of growing competition, which we'll talk about in a minute too. Now, value propositions. Thorchain is the first decentralized cross-chain liquidity protocol, and it's unique in terms of its effective approach to liquidity. And the protocol uses a fee to eliminate slippage, reduce chances of losing users' liquidity, and neutralize the impermanent loss through repeated polling until confidence. So it was pretty cool in that regard, but now many other cross-chain dexes do the same type of thing. But there's more. There's another cool thing. It's kind of like what they call Saver's Vault, which recently launched. And this is a new way to supply single asset liquidity on Thorchain. And any user can simply deposit native Bitcoin and earn in-kind yield and withdraw their principal at any time, since they maintain full control of their keys. Not your keys, not your coins. So that is where it is. I've never used this myself, but you can see here on this list, the list of assets that can be deposited and the APR. So Bitcoin gets 4.89%, ETH 6.1%, Bitcoin Cash 6.14%, Doge 8.49%, my God, Litecoin, BNB, AVAX, and I'm not sure what Gaia Atom is, but that's in there too. And you get 7.25%. Avalanche 15.19% is good, but still less than the inflation. So we look a lot of inflation here on this. And we'll talk more about that too in a minute. So let's look at staking rewards. The staking rewards are awesome, especially if you operate as a liquidity provider. You can get up to 17.5% here. And if you bond RUNE as a node operator, you can get 10.42% as well. So that's quite attractive. Now let's talk about the investors, the people behind the anonymous founders. There's a couple of names here: Delphi Digital, X21 and Z Prime, never heard of. Z Prime is out of Gibraltar. And Multicoin Capital, who has been infamous lately, are part of it too. So that's the investors. Now, competition. There are tons of competition from many, many different chains. Some are evolving AMMs, DEXs, multi-chain DEX capabilities, but they're coming fit, fast, and furious. Some of the names, there's a whole bunch of stuff been built on Cosmos, Akala's in there, even Sovereign on Bitcoin blockchain and others. Harmony's in there too. So the competition is immense in this space. Again, they were first to market way back in 2021, but now they have a lot of competition that they didn't have in the beginning. Let's look at TVL real quick. Now TVL is down like most other chains, but it's holding up pretty good. TVL locked per DeFi Llama is 93.01 million, and it was high as 550 million in 2022. And there's many different ways that people can measure TVL, but I like DeFi Llama because they cut out a lot of double counting that can happen. Now, let's look at technology and developers. I went to their GitHub page. They have 40 followers and number of projects 2, repositories 53, and 3 people are involved in their GitHub page. Again, that is the Thorchain GitHub page, which was not very active when I benchmarked it against other chains. So that is a little point of concern. Now, how it works, this is another pretty cool feature. The capital on Thorchain can lose its balance over time, like any other liquidity protocol. But sometimes there's too much capital in liquidity pools, and sometimes there'll be too much bonded by nodes. And if there is, just like kind of Bitcoin, it is a self-regulating mechanism. And it'll bring the network from an unsafe place back into a safe place. So if there is too much capital bonded by nodes, the network is inefficient. If the network becomes unsafe, it increases the rewards, block rewards and liquidity fees for node operators, and reduces the rewards for liquidity providers. And this is how it stays in what they call the whole pendulum to make sure the protocol remains secure over time, which is a pretty cool feature. Let's look at tokenomics real quick. The tokenomics is not bad, in fairness. You can see here the operational reserve, 10%, community, 10%, team, 10%, seed, 5.2%. Well, there's raised some early capital. Protocol, 44%. And even though this is old, circling 9.8%, that's no longer, it's a little bit out of date. But again, the initial allocations were pretty fair as we go forward. Now let's look at inflation. Now, this is inflation over the last 12 months that I measured using a point in time measurement. Now, the inflation over the last 12 months was 28.07%, and there is another 51% potential inflation to go because the total supply is 500 million and 330 are still are circulating right now. So there's another 170 million or so to go. And there are still some lockups coming to the market. And remember also that RUNE is used as rewards for node operators that they will obviously have to sell, which means they'll hit the market to cover cost. And this could be a lot of sell pressure down the line. And that 28.07% over the last 12 months is high. I don't expect it to continue as high. If we come back a year from now and measure it, it will not be that high, but it'll still be probably north of 20%, I estimate. Now let's look at the ecosystem itself. The ecosystem looks very expansive, very large, good, and they say that the bear markets are time for building. The problem I have with this ecosystem is I don't recognize a lot of the names. I've never even heard of many of them. So I don't know if they're just packing a, kind of an icon slide with a whole bunch of brands to make them look like they have a huge ecosystem. I'm not sure. We've seen that from names like Aptos as well, where things are just padded to make it look like they are really growing and big. But again, I don't recognize a lot of these names. Maybe I'm just not in touch with a lot of these names. So that's a bit of a concern. Now, markets and liquidity. There were not many markets for RUNE or pairs available compared to other assets. I compare everything to other assets. It is heavy on Binance with a little KuCoin and Kraken in there, but there's not a lot of volume, not a lot of liquidity. You can see that the amount of trading volume, on Binance is not too bad, 4.3 million, but compared to other assets, it's a very, very small amount. And compared to the market cap, it's not too bad either. But again, a concern. Growth and longevity. Although Thorchain does not have the longevity of other projects, it did launch in June 2020 with their public testnet. And that's when, it's been running since then, which is not bad. But it's also, some people consider that an optimal time to launch. Some people consider that a bad time to launch. In the middle of a bull run or just before a huge bull run, it can be tricky. But here they are, and they're still alive and well during this bear market. Let's look at risks. Now, this is a controversial piece, and I'll take a little side note here, is, again, as I started out by saying, 98% of crypto will go to zero over time. The question is, what will survive? What has a moat? What has unique value propositions, unique selling propositions? And one of the things that I really have to stress this time is, if there is a lack of information or data that's not public, it means people could be hiding the ball. I've noticed many chains over the last year and a half have taken data that they used to have public down, like supply held by the top 1%, like inflation numbers, all sorts of data, transactions per day, daily active users. And when chains hide that type of stuff, it gives me pause. But I'm going to go through this list. Now, I know as well that people that own this token may be offended. All I'm sharing is publicly available data. That's all. So you can make your own decisions. So first of all, Vitalik on governance tokens. This came out last week. I actually mentioned it in a video, and it's kind of appropriate right now to share too. But in this title, you see here he says, Buterin calls governance token speculation pathological, and the notion of governance rights as a narrative for why a token should be valuable is crazy in his mind. You're literally saying, I'm buying X now because later somebody else may buy it from me. And, the greater fool type concept towards they're so for, as far as he's concerned, people that have the big bag of governance tokens can twist a chain towards their own special interests. But you could also argue maybe Ethereum does the same thing. But that's his take. So just beware when you are buying governance tokens. I personally own 0 governance tokens right now. Now let's look at daily active users on Thorchain. Now, I could not find real-time data for RUNE daily active users across the entire chain, but I did find the ETH chain of RUNE, which is one of the most active. And the daily active users is probably the most alarming thing. Now, in a lot of my videos, I calculate market cap divided by daily active users, and this one is off the charts. So right now on the ETH chain of Rune, it used to have north of 500 daily active users. Now it's down to 8. 5 existing, 3 new during a bear market. That is 8 users per day on the ETH version of the chain, which is one of the most active. That is kind of startling. Now, and even though it's just the ETH part, you can see it went from 500 to 8, which is not good. Now, I also believe that during a bear market, a chain should at least remain flat, if not grow if possible. And those that shrink, it is a little bit of a red flag. Let's look at transactions per day. Again, on the ETH chain, transactions per day are down from 400 to 7. Okay, that is a big drop of 7 transactions per day. Not a lot considering the market cap. Again, it's the ETH version of the chain, not the whole chain, but still, it's the only data that I could find after a lot of digging. In addition, they did recently have a 20-hour outage, and I'm well aware chains have outages. Sol has had their fair share. But this issue was found to be a combination of Cosmos UNT string or something, and a memo, some coding issue. And chain halts are typical for some blockchains, but reliability and consistent uptime is generally cited as a key advantage for decentralized networks over centrally controlled alternatives. And this outage did last for 20 hours. Again, not dinging it for the outage. Outages happen, especially with congestion, but congestion was not the cause of this by no stretch, especially when you look at 7 transactions per day. It was another issue. Now, there was also a double exploit in 2021, 2 hacks back to back, whatever you want to call it. I won't dwell on these either. All been fixed, all been settled. But the point is that did happen, which was bad, and it did hit the price last year. In addition, there is lack of data for this chain. Now, considering it's a kind of a top 70 blockchain, everywhere I dug, I couldn't find all the data that I needed, like no annualized transaction volume. You had TVL, which is good, no fee data, no active developer data that I could find. No daily active users. I had to dig really hard for that and to get something. So that gives me a little bit of concern too. In addition, Multicoin, one of the backers, you can see their track record. They don't have a good history. Solana is there in pink. As you know, that got hit hard due to FTX punch in the face and some other items too. But again, this is where they are. You can see that Thorchain is down just below the middle half, right under Algorand, as to investments from Multicoin Capital. And they too are having their own issues right now. So will they be backers in the future for additional rounds? I don't know. Will they be forced to liquidate? I don't know. Have they liquidated already? I can't find out. But just another thing to keep your eye on. Let's look at the price history as well. Like daily active users and transactions per day, there's not much sign of life here, despite being up 36% off the $1.003 low a couple of weeks ago. The chart just looks pretty bad, and we're down 94.61% or something from the all-time highs. But that is not unusual. Many names are down 95%, including some we follow here. So I wouldn't take that as a ding. Now, analyst price predictions. I did not do any price predictions for this because I'm just pointing at the risks. I need to make that effort if I'm really getting close to a buy decision, and I wasn't, so I didn't make the effort. But these price predictions are not mine, everybody. They are from other analysts. Now, again, as I did say, demand for Rune should go up as it's adopted, but is it being adopted right now? Not based on TPD and daily active users. But that being said, these price predictions are pretty generous. One is from Wallet Investor, $45 by January 2027. Digital Coin, $25 in 2029. And from priceprediction.com, believe Rune may shoot up to $182 by 2030. And these are all technically feasible if they get the adoption, if everything moves to the blockchain and they become the leader in cross-chain DEX type activity. Possible. But is it likely? That's the question. And a lot of stuff is going to happen over the next 8 years. So be careful out there, everybody. Now, quick conclusion from this. I'm going to go, again, data-driven, fair, objective, not biased, don't own any, never bought any, had a limit order in once, it didn't fill, missed by a penny. But this is my conclusion. Now, let me step out for a second. None of this means, I want to stress this, it doesn't mean Thorchain is not a bad investment. It doesn't mean it can't go back to its all-time high. If it were to go back to its all-time high, I think it would do a 16x from where it is now. I think the all-time high is about 22 bucks. I think it's trading about $1.30, $1.36. That'd be a 16x from here. But the question I always ask myself is there a safer return with less risk, more transparency, more data where we can make decisions? And I believe there are. But this is my conclusion. First, it was the world's first trustless multi-chain DEX, which is good. It does have this new Savers Vault feature, which is good. I don't know how many people are using it, but not that many based on the data. And the pendulum feature is also good. Now, the bad is the team is anonymous. The backers don't have a good track record. There are some unlocks that are coming, so there could be more selling pressure. Inflation is very high, way too high for my liking. And it's a key thing I look at. Daily active users, transactions per day, very concerning with the drop-off. On the ETH chain, there is a lot of missing data. The chart is not good, but many charts are not good right now. It is a governance token, and you all heard what Vitalik had to say about those. And there's lots of competition. So with that, everybody, lay it all out, make your own decisions. That's the stuff I look at. There's some gaps in data that give me some concern. Inflation gives me some concern. Tokenomics is good. Technology has a couple of interesting features. But would I buy? No, not right now. So hope that doesn't upset anybody. Hope you like the video. And I'll see you all tomorrow. Thank you. And thank you to the mods in the chat and everybody out there. You all rock. See you soon.